Hello and welcome. My name is Dominic Frisby and gold is now number 2. How about that? Last month, seen something of a landmark development. Gold has overtaken the euro to become the second most held asset by central banks. 20% of central bank reserves are now held in gold against 16% in euros. And also of considerable note and largely unreported, US dollar holdings have fallen below 50% for the first time in 30 years. They now sit at 46%. De-dollarisation is happening, folks, right in front of our eyes. And this 20% gold figure compares with just 10% 10 years ago. And I've little doubt it's going to double again over the next 10 years and will be at 40%. Even ECB chief lizard Christine Lagarde has noticed the accumulation of gold by central banks, she says, continued at record pace. Some countries have been actively exploring alternatives to traditional cross-border payment systems. Now that last sentence is telling. It further confirms what we all knew was happening. It's not just as a store of value that the US dollar's central role is subsiding, but as a medium of exchange. Gold is reclaiming its historical role as a core international holding. Make sure you own some. And if you are buying gold or silver to protect yourself in these interesting times, the dealer I use and recommend is the Pure Gold Company. Pricing is competitive, quality of service is high. They deliver to the UK, the US, Canada, Europe, or you can store with your gold with them, and I'll put a link to them in the description. Now, in that same press release, Lagarde says, offering solutions for settling wholesale financial transactions recorded on distributed ledger technology platforms in central bank money will increase the efficiency of European financial markets and the global appeal of the euro. You sure about that? That is reptilian speak for the Euro CBDC is coming soon. And this EU CBDC beast could begin as soon as this year. It'll be rolled out first at the institutional level and then it will be forced on the minions. And I don't think it'll work, by the way, for reasons explained previously. CBDCs don't have the financial architecture around them that we take for granted. Doesn't mean they won't try. I just don't think they'll work. Not at retail level. Now, turning to what might prove the big kahuna. The real crisis here. Government spending cannot stop. We have another rapidly developing plot line, and this announcement was widely overlooked by the press, perhaps on government orders, but perhaps because, as Occam's razor would have it, they're thick. And it is, in my view, a highly significant development, and it is going to open the door to a ton of money printing. Now, Elon Musk, as we all know, was aiming to get 2 trillion in cuts when he set up Doge. He barely got to 100 billion, and Doge has failed. And the effective admission is that the US government cannot stop its spending, and it can't be stopped in the UK, by the way, as Rachel Reeves is discovering. We just can't stop it. The monster is out of control. At least in the US they tried. Here they sort of tried a little bit. But that means more deficit spending, more debt, and this has one inevitable outcome: further declines in the purchasing power of money. And then we have this headline from Bloomberg. US plans to ease capital rule limiting bank treasury trades. The supplementary leverage ratio limits how much US banks can hold in treasury securities. It was introduced after the financial crisis in 2008, and it requires banks to have a certain amount of capital against their total leverage exposure. This is now being reduced. The capital requirement will be cut from the current 5% to 3.5% to 4.5%. Doesn't sound like a lot, but it is. And in any case, the change in capital requirement would exclude treasuries, allowing banks to hold more US debt without impacting their capital requirements. In wonk speak, the move aims to boost liquidity in the $29 trillion treasury market and reduce borrowing costs for the government. What it really allows is more leverage, i.e. more debt, to buy US debt. And what that means is more money printing. Debt is how you create money. The more money there is, the less it buys you. So the next date in the devaluation calendar is upon us, and the case for gold and Bitcoin just got even stronger. And by the way, while I'm bullish about gold in all of this, I cannot tell you how bullish I am about Bitcoin. The reason is digital technology. Today we use electronic digital technology for everything, from payments to record keeping. Paper still has its uses, but Office, Excel, PDFs, they're better. You don't need me to explain why digital is usurping or has usurped physical. Gold is a physical asset, the most analog asset there is. Any kind of digital gold system built on top of physical gold requires some kind of trusted third party. The multiple failures of gold standards over the years show that third parties, particularly if they take the form of the government, cannot be trusted. Gold is wonderful. It's going to be so important strategically, but a digital gold system built on top of gold is not the same thing as gold. The gold is no longer value in and of itself, but somebody else's liability. The same is not true of Bitcoin. And that, in that respect, is why Bitcoin is digital gold, or a digital bearer asset. In this new digital world, it's going to find a lot of use. Multiple currents, one destination. We have the rapid adoption of Bitcoin at the corporate level, which in itself is a form of de-dollarisation. And I've been writing a lot, by the way, about Bitcoin treasury companies. If this is of interest to you, we have, it's all on my Substack. But we also have de-dollarisation at the national level, at the corporate level, ordinary investors at the retail level. Concurrently, we have this accelerating devaluation and debasement of our national currencies. The currents are all flowing into the same ocean. Bitcoin and gold. I know readers, but Bitcoin. I know some viewers don't like it. I urge you to reconsider your position with an open mind. In this increasingly polarized world, you do not have to choose between Bitcoin and gold. You can own both, and I urge you to if you don't already. They are both, for different reasons, going to have a big role to play. Thank you very much for watching this video. I hope you enjoyed it. Please like it, please share it, all that stuff. It helps. Please subscribe to this channel, follow me on here, and subscribe to my Substack. Links and everything are below. And if you want to read my brilliant book about Bitcoin, I will put a link to that as well. Thank you very much. Until next time, goodbye. And as they say, the kids say, smash up the likes.